When investing in a country's bonds and stocks, people often don't know how to analyze the country. When I worked in an investment bank, how did the bank teach us to think about a country's economic issues? Let me tell you, hello everyone, this is Brown's Wealth Management Watchtower. I am committed to building a visionary watchtower for you so that you can discern direction and move forward steadily in a complex and changing investment environment. In fact, at the bottom level, we only look at three things: the economy, prices, and employment, which generally correspond to the three most common economic indicators: GDP, CPI, and unemployment rate. So generally, the goal of a central bank or government is to make all three numbers look better, which reflects that their economy is generally not too bad. Actually, I think there is another possibility that is important for people's livelihoods, but many economists are not particularly concerned about it, which is the wealth gap. Of course, when we talk about these, they belong to the first level elements, which are the backbone of the economic tree. So data such as PMI, core inflation, wage growth, retail sales, etc. are more segmented data, and their focus will vary in different countries and periods. For example, in the past few years, the United States has attached great importance to employment data, and the focus of the non-agricultural market has shifted to inflation in the past 2 years. However, if you only look at CPI, it may interfere too much, so you need to analyze further. Then we will analyze the real estate, land, oil and food. Right, with these subdivided economic data to measure the economy, you will know that I may be quite wrong about this place. At this time, we will think about how to change it. Then we will look at the government. Its fiscal policy, including the monetary policy of the central bank, combined with some major asset prices, such as stocks, treasury bond, real estate, foreign exchange, etc. to form such an analytical framework. It is very complex. It is really complicated in the connection between these chaos, so the more professional people may look more carefully. At the bottom level, it looks very simple. Let me repeat, it is an analytical framework from top to bottom, from primary to secondary, from key points to details, including economy, prices, and employment. Do you feel like it sounds simple, just that simple? Yes, it's that simple. Although it sounds simple, he is right. It has been very helpful for me to understand the economies of these countries over the past decade. Sometimes when you see details that are very complex, it's easy to not understand. So what do you do at this point? You need to jump to the next level and not be bound by those details, so that you can find the main contradiction. If you don't have such an economic framework, you may have read a news report about consumption rate, savings rate, and youth unemployment rate. After reading it, you may feel that there is a lot of information input, but your mind may end up blank and you may not remember anything. And once you have formed such a basic framework, even if you don't have much economic background, your entire theoretical knowledge framework is very clear, so every time you watch the news or my channel, it will become more and more perfect, instead of a bunch of messy details that you can't remember. When you have this idea of a primary-secondary framework, it actually helps you identify the main problems and contradictions. In fact, when you are involved in some very complex issues, such as economic problems and economic systems, you may not be able to judge the weight of each factor so well. For example, if I analyze the sharp rise of the Indian stock market, it makes investors excited and drives the Indian economy to soar. This analysis may sound logical, but in reality, the proportion of Indian investors is very low. Some data say it is 5%, while others say it may be around 10%. In short, it is relatively niche and does have a certain driving force, but its weight is too small, so it is generally not the main factor. If we want to switch countries, such as the United States, it may be because the United States is a country with financial markets as its financing center. You see, everyone's pension funds are included, and conservative estimates suggest that more than half of the investors may also be involved. For example, if I were to say that ASME's revenue has skyrocketed, driving the development of the Dutch economy, many people would probably think it makes sense. ASME is a company that monopolizes the world's high-end lithography machines, and of course, it is the engine of the Dutch economy. But in reality, it has driven the Dutch economy. It has definitely driven a little, but if you talk about the main factors affecting the development of the Dutch economy, ASME is not ranked at all. You can see that its stock price is indeed very good in 2023, but the Dutch economy is not ideal. So when you look at the 2023 GDP growth ranking, the Netherlands ranks ahead of Germany, third from the bottom. It is a country with a GDP of over 1 trillion yuan, but factors such as sluggish real estate and weak consumption are actually far greater than an impressive ASML. It's a bit like if I were to say that Apple's performance is good and has driven the US economy. Everyone may feel a bit ridiculous after listening to this. In fact, this is the feeling. When analyzing complex economic issues, it's not just logical that the stock market can rise and drive the Indian economy. ASML cites seemingly reasonable reasons such as the Dutch GDP, but they are not the main problem. Why am I making it very easy to understand, but I really don't mean to get a bunch of information or data piled up on your face. For example, in this video, I can actually list all the key points that affect the Indian economy and the development of the United States mentioned in the research report in one go, which is convenient for me, but you may be confused. I hope to tell you the most direct analysis methods as much as possible. That's all for this issue. If you have any questions, you can communicate in the comment section. If you are struggling with investment and financial management in your daily life, you can follow me with your fingers and give you different perspectives to plan your investment and financial management, making your life more comfortable. See you in the next issue.